Hey everyone, welcome back to Corporate Decoder, where we unpack the secrets hidden within company filings and reveal the true story behind the numbers. Today we're looking at DevvStream Corp, and let's just say this filing is all about keeping their head above water in the most literal sense, or rather keeping their stock price above $1. Alright, so DevvStream Corp just filed their current report, and the big news is they've gotten a thumbs up from Nasdaq. You see, sometimes stocks can fall below a certain price, and if they stay there too long, they can get kicked off the big stock exchanges. This report is all about DevvStream getting back into Nasdaq's good graces. The key date here is August 22nd, 2025. That's when DevvStream received word from Nasdaq that they had met the requirements to keep their common shares trading on the Nasdaq capital market. Imagine getting a notice that you can still play on the big leagues. That's essentially what happened here. It's their common shares. Think of these as the regular little pieces of ownership in the company that most people buy and sell. And the symbol you'd look for to trade these shares, that's DevvS. Keep an eye on that symbol if you're interested in DevvStream. And the exchange where these shares are listed is the Nasdaq Stock Market LLC. This is a major stock exchange, a pretty big deal for any company. This section, Other Events, is where the real story of this filing lies. So on August 22nd, DevvStream got a notice from Nasdaq. What was this notice about? The notice said that DevvStream had met a specific rule, Nasdaq listing rule 525 FT Deci 2. This is the rule that keeps companies from being delisted if their stock price gets too low. And importantly, it confirmed that their common shares would continue to be listed and traded on the Nasdaq capital market. Winning. Let's rewind a bit. Why did they need to regain compliance? Well, as they mentioned, Nasdaq had previously told them their stock price had fallen below $1. Specifically, it had closed below $1 for 30 days in a row. This is what is known as the minimum bid price requirement. If your stock price stays below $1 for too long, Nasdaq can delist you. This is like a company getting a warning from the teacher that if they don't improve their grades, they'll be sent to the principal's office, or in this case, off the stock exchange. So what changed? The crucial piece of information is that as of August 21st, 2025, DevvStream's stock price had closed above $1 for more than 10 consecutive trading days. This is the magic number. By getting the price consistently above $1 for a sustained period, they showed Nasdaq they were back on track. And because they met that requirement on August 22nd, they received that official confirmation letter from Nasdaq. It basically said, you're back in compliance, you're good to go. This is obviously very positive news for DevvStream and its investors, as it means continued access to the liquidity and visibility that comes with being traded on a major exchange like Nasdaq. Losing that listing would make it much harder for investors to buy and sell their shares, and it would also signal a lack of confidence in the company's financial health. This next part is about the accompanying documents, the exhibits. The first exhibit mentioned is number 104. This is the cover page information, but formatted in a special way called inline XBRL. Think of it as a digital tag that makes the key information on the cover page easy for computers to read and understand. It's a modern way to present important company data. Now, let's talk about the overall picture here. DevvStream's stock had a problem. Its price dipped too low. By getting it back above $1 for 10 days straight, they've avoided a potentially serious negative consequence, which is being removed from the Nasdaq exchange. This is a crucial stay of execution and shows some resilience. However, the underlying issue, why the stock price fell in the first place, isn't detailed in this specific report. This filing focuses solely on rectifying the listing requirement. From a Warren Buffett perspective, we'd want to know what's driving the business, what's the true intrinsic value of DevvStream. This report doesn't give us that broad view. It's like focusing on keeping your car's license plate valid without talking about whether the engine is running smoothly or if you're even going in the right direction. The strength here is that management was able to execute a plan to bring the stock price back up, preserving their Nasdaq listing. That's a sign of proactive effort. The weakness, or rather the unknown, is the fundamental health of the business. Did they achieve this price recovery through actual business improvements or through other means that might not be sustainable? That story is for another filing, likely their quarterly or annual reports. The opportunity for DevvStream is to capitalize on this regained compliance and build momentum with solid business performance. The risk is that if the underlying business doesn't improve, they could find themselves back in this situation. In conclusion, DevvStream has successfully navigated a significant hurdle by regaining compliance with Nasdaq's minimum bid price rule. This is a short-term victory crucial for maintaining their market presence. However, the real test will be whether they can translate this into sustainable business growth and a steadily improving stock price based on actual performance. What's your take on DevvStream's situation? Do you see this as a sign of comeback or just a temporary reprieve? Let me know in the comments below. If you found this explanation helpful, please give this video a thumbs up and don't forget to subscribe to Corporate Decoder for more insights. We also have a fantastic community over on Discord, linked in the description, so come join the conversation. Thanks for watching, and I'll see you in the next deep dive.